team here at HSBC. I'm delighted to be once again your facilitator. This is the third webinar in our Textile and Garment series. You may recall in the first webinar we discussed how COVID-19 has impacted supply chains, and in the second webinar we zeroed in on the post-COVID state of the T&G sector. Today's topic is sustainability, so let's have a quick look at the agenda. As always, we have a great lineup of speakers. First up is a presentation from Jonathan Drew, Managing Director, ESG Solutions at HSBC. This will then be followed by a panel discussion featuring Sharika Senanayaka, Director, Environmental Sustainability at MAS Holdings, Mohammed Jabbar, Managing Director, DBL Group, and David Harity, Managing Director, Growth Propositions at HSBC. The rise of sustainable fashion has the potential to transform how the apparel industry operates as a whole. HSBC's recent Navigator survey finds that 85% of businesses view environmental sustainability as a priority, and 23% are already using sustainable practices to drive sales. In today's webinar, our speakers will discuss how sustainability is impacting the apparel industry and what the industry can do to transition towards sustainability. Just a reminder that you can submit questions via the Q&A button at the bottom of your screen, and we'll try to answer as many as we can. So without further ado, let me hand over to Jonathan Drew, our in-house green guru, to share his insights on sustainability. Jonathan, over to you.
Thank you very much, Alan. It's a great pleasure to be able to participate in this webinar and talk to everyone this afternoon on this crucially important topic. 6 months ago, I know many of us would have been very focused on sustainability issues, thinking about long-term impacts of climate and other aspects of human activity and how it impacts our environment, and in turn then how the environment is beginning to impact us. But 6 months ago, many people might still have been arguing, and were still arguing, well, actually our systems upon which we depend for a healthy lifestyle are actually very robust. But 6 months on from there today, I don't think anybody can reasonably be suggesting that somehow our systems are anything other than incredibly fragile. And this recognition of that fragility also goes with it a recognition of the need to change. And as more recognize the need to change, the recognition from all of us of a need to change very, very rapidly. As Alan said, my name is Jonathan Drew, and I run our ESG Solutions group here at HSBC, and my role is to help you, our clients, to go through these changes, or manage what we might call the transition process, and specifically to bring to you the financial products and services to help you through that process. Obviously, as a financial services organization, we recognize we have a huge role, and of course, and a huge responsibility. And an absolutely critical part of that is working with you as our clients in the textiles and garment sector. And if we go to the first slide, we can see why that's so important. A couple of data points here. The textile and garment sector is a huge emitter of greenhouse gases. Data from our research team shows that the estimate for that is maybe 10% of all greenhouse gases were generated from textile production, 1.2 billion tons of carbon annually, which of course is somewhere nearer to 4 billion tons of carbon dioxide. But also that the industry has a huge impact on our environment through pollution. 20% of all water pollution arising from textile productions. These are estimates, of course. But these are not the only big impacts of the industry. The industry has some massively positive impacts. The industry employs, according to the data I've seen, more than 300 million people globally. That's again about 10% of the global workforce. And the industry accounts for somewhere between, again according to various estimates, 2 to 3% of global GDP. So it's a massively important industry. And in the concept, therefore, of transition, this is not about just transition, but it's about getting transition right. Because we have to recognize that getting that transition right is key to the welfare, health, happiness, and opportunities for so many. And if we go to the next slide, we can just see some of the complexity of the issues that the industry needs to face. And it's not just about environmental issues. It's critically about social issues as well. Social issues including the fair distribution of wealth, addressing and dealing with the concerns of vulnerable sectors of our society, concerns about safety, the need to deliver diversity, all of which we might put into this concept of a just transition. So this is the challenge. How, as an industry and with the support of your financial services partners, do we undertake this critically important transition? And if we go to the next slide, Danny, we can just pick on one item of sort of what the industry is doing. We'll talk about the industry first before bringing in the financial piece. Of course, a critically important initiative, the Industry Charter for Climate Action, signed in 2018, 43 leading players in the sector committed to 16 initiatives under the Charter. Perhaps the standout one was this concept of net zero by 2050, a clear endorsement of the Paris Agreement. And of course, that was then supported by a number of complementary and implementing initiatives around making the investments to facilitate the transition, reporting on emissions, setting targets around emissions, engaging across the entire supply chain from the producers of the raw materials right the way through to the end customer, as well as developing tools to support that. And progress isn't bad. More than 50% now of these entities, and this was a survey that we sponsored actually for KPMG to review progress against of the Charter participants against the ambitions they'd set out. 50% now reporting Scope 1 and Scope 2 emissions, but less than 15% reporting Scope 3. So a lot of work to be done in the supply chain. A lot of people setting out plans and strategies and disclosing those at about 60%, but clearly a lot of further work to be done. So having looked at sort of what the industry is doing, then to think, well, where does finance play to support this? And if we go to the next slide, Danny, we've set out on the left-hand side, just sort of summarize some of those key Charter commitments. And in the middle column, some of the actions that the industry is taking to deliver on those commitments. And a lot of them involve capital expenditure, investments in renewable energy, investments in using that energy more efficiency, investments in water management, reducing those high pollution numbers, investment in product design to create and drive towards a circular economy, as well as investing in natural resource protection and climate adaptation. So the role for finance here, of course, is to bring, if we're still on the previous slide, Danny, to bring loans, bank loans, capital market solutions to support the construction and to finance those capital goods. but also in the trading process, sustainable or green trade finance solutions, working capital solutions. If you're acquiring and purchasing renewable power, we can offer solutions for that. We can perhaps incentivize members of the supply chain to improve their performance. Perhaps if you're a supply chain member and you deliver against certain KPIs, we can offer, or the financial markets can offer, a lower discount rate when perhaps monetizing your purchase orders or your receivables. So a huge range of financial products to support delivering you the funding needs where you have those, capital and operating, but also in managing the cash you have. If you have spare cash in your business, a bank now, we can offer you green deposits so that you know, although you're not deploying that capital, it's being deposited with us and we are making and using that money to make green loans. And obviously then that flows through to a whole series of other wealth solutions, not just thinking about what the company might be doing with its pension plan, providing ESG investment solutions for pension plan managers, but also for high net worth individuals, the company owners, who want to have their capital, their monies managed with a strong ESG theme. So a whole range of funding solutions across the whole suite of business activities. And on the next page, we can see just some of the volumes that we've seen in these so-called green or labeled finance markets. This is the green bond market. More than 327 billion of green and social and sustainability bonds issued in 2019, which is about 3% of total fixed income issuance in the public market. A very significant proportion of issuance and growing. Year-to-date figures at 258 billion, which is up about 20% on last year's figures. These are the public markets. You may not access the public markets, but if we go to the next slide, we can also see what's happening in the bank markets and the loan markets, where we have two products, the green loan and the sustainability linked loan. These principles only came out in 2018 and 2019. And within a year or so of establishing the product, we already saw 180 billion of such transactions in 2019. And in first half 2020, we're fractionally ahead of that run rate and expect to exceed it by quite a bit, because typically a lot of these loans get booked or recognized in the final quarter. And there are two products in here. I'll just make a point around the products here. We have the green loan, which is similar to the green bond or the social bond, where it's all about the loan becomes green because it's applied to finance a green project or a green piece of CapEx, some of those CapEx in your industry that we mentioned earlier, or the sustainability linked loan, where it's becomes sustainability linked not because of the use of proceeds, but because of in the pricing mechanism, there is an incentive inserted in there for the borrower to achieve certain sustainability-related KPIs. And the good news for clients as borrowers is if you achieve those targets, the loan margin can drop. Now, you can see from the pictures here just how rapid the growth of these sustainability-linked loans has been. And we shouldn't be surprised about that, because, of course, what this is doing is it's creating a financial incentive for the borrower to improve. Every borrower, of course, likes the opportunity to get a margin reduction. And we like lending them, not because we think we're giving you cheap money, but because we think that we are rewarding you for de-risking your business. And therefore, it's natural to reward a de-risked business with lower margins. So it's win-win-win for us. If we go on to the next page, Danny, we can again see this sort of huge shift in capital to sustainable investing. The graph at the top shows, as just again one illustrative piece of data, the number of signatories to the what used to be the UN Principles for Responsible Investment. Now more than 3,000 signatories with more than 100 trillion assets under management. Now, you may not access these public markets, but these public markets are supporting us as a bank and facilitating through our green bond issuance to these investors to make green loans right the way through our entire client base. And prices are starting to move. And this is where it gets really interesting. In the bottom picture, just an example here of how ESG leaders are now outperforming ESG laggards. This is the MSCI ratings, and we've compared the 100 leaders, or the equity of the 100 leaders, against the equity of the 100 laggards. And in just this 4 months through the beginning of this year, and there's a COVID impact here, you can see ESG strategies dramatically outperforming. It's actually a 17% outperformance in the equity markets. And in the fixed income markets, we haven't shown the graph to avoid the clutter, but it's about a 5% improvement. So there's a huge story here. If you're thinking about going to the markets to raise capital, you need to be communicating that ESG story. And there's also an important point, of course, when we all think about if we have a little pot of savings, how do we manage that when we can see this happening in the markets? And the drivers for this will get stronger. If we go on to the next page, we can see just a snapshot here of how governments and regulators are driving the shift of capital to green or shift of capital to ESG. And we're seeing it across, it's a global phenomenon. We're seeing it from the sort of the supranationals and initiatives such as TCFD, Task Force for Climate-Related Financial Disclosure, driving financial disclosures across the finance industry. We're seeing it from major regional regulators in Europe, and we're seeing it right down at the individual country level. And it's government policy, it's prudential regulators, it's central banks, and it's also stock exchanges driving disclosure. So this theme is not going to reverse, it's only going to continue. And so on the next slide, the final slide, just to sort of conclude the sort of where are we going, we've seen this shift. The products have been developed, the products have been tested, they've been shown to be reliable and robust. We're now starting to see financial outperformance. I think we will continue to see, of course, a lot of capital being directed, maybe too much, to crisis response needs around COVID, and maybe more needs to be going into other sort of traditional green areas. But that's a reality we have to deal with, until this current pandemic issue is resolved. What we are clearly seeing is that in every investment decision, ESG has now become mainstream. It's not just the odd fund here or there that's embedding it in their process. It's right across the market. The UNPRI numbers are showing that. And as the prices move, of course, nobody can now ignore this. And so if you're looking to tap into the capital markets, whatever level you're going into, whether you're going through your bank or whether you're going directly into public markets, you have to get your story right. You need to disclose, because if you don't disclose, people are going to move away from you, because disclosure is key. That's the way in which you tell your story. So setting metrics and disclosure of that, we are seeing a massive increase in that. We're also seeing this concept of transition finance. And what this is really about is we've seen so far a lot of investment around what we might call the clearly green investments, renewable energy, energy efficiency, green buildings and so forth. But we're now seeing capital go into what some call the sort of harder to abate sectors. I wouldn't use that terminology myself. I think about sectors which are higher hydrocarbon but need to transition. And in some senses, that's where the textile and garment sector is. But there's a recognition from capital providers that those sectors, and back to the first slide, need critical support, because without that financial support, the transition will be frustrated. And finally, growing stimulus from governments and regulators. We now have in Europe, we have, and in certain countries in Asia, we're starting to have these green taxonomies or green standards, and we're starting to see financial incentives from the public sector put around those green standards. So, for example, effective of June this year, banks can enjoy a 25% regulatory capital discount for lending to qualifying green infrastructure. So the momentum, again, is very significant. So I'll pause at that point, Alan. Hopefully there are a few thoughts that will trigger some conversation as we go through the rest of the section. And obviously, I'm delighted to take any questions that people do have, Alan.
Thank you, Jonathan. That was a lot of insight. Perhaps I'll take this opportunity to ask you maybe two questions. The first one pertains to retail. So how would you describe the impact of COVID-19 on ESG in the retail sector? Do you think ESG criteria will become even more important for investors on the back of this crisis?
I think ESG and the prominence of ESG in investment decision making is growing across all sectors. And there's no exception here. I think clearly what we have seen is a growth in the S factor within ESG, and many investors saying and sort of recognizing COVID as a particular social issue or having a lot of impacts, social impacts, because of the sort of, in a sense, the particularly adverse and tragic impact on more vulnerable sectors of society, and this expectation of capital providers, investment asset owners and the managers of that money, that if the corporate is not addressing that, if the corporate is not looking after its staff, if it's not looking after its adversely impacted suppliers or customers, that's not a corporate where they want their money to go, because they see that corporate at risk. So I wouldn't distinguish between the retail sector and other sectors, in fact, Alan. I would say this is a general theme, critically important. So whoever you are, absolutely this story needs to be told. I think what's interesting for within the textile sector across the chain, from manufacturing through to retail, obviously it's a high impact sector. So I think that's where the attention comes from. We are, as many of our clients will know better than us, of course, we are seeing consumer preferences change, but a lot of those consumer preferences will be addressed by actually things like labeling of the environmental impact on the final product for sale. So it's actually an assessment of what's happened in the chain rather than what might have happened just specifically at the retail end of the chain.
Speaking of consumer preferences, so sustainable fashion, it's a trend that's been picking up steam. In what ways do you see it affecting supply chains? Are you seeing increased sustainable finance activity in both from the buyers as well as from the suppliers?
Yeah, absolutely. I mean, and we're starting to see, if we think of the buyers and the brands, I mean, interfacing with the end consumer, and this is very relevant, I think, in particular in Asia. In a sense, the Asian consumer, in many surveys, is shown to be more susceptible to the sustainability positioning of the product they're buying than, for example, their European or North American counterpart. So they want to understand how that product has arrived at the point of sale. They want to understand the environmental impact through that process.
Thank you, Jonathan. Thank you for your time. We'll now move to our panel discussion. Our panelists are all raring to go, but first, a quick intro. Sharika Sinanayaka is Director, Environmental Sustainability at MAS Holdings. She leads the Central Sustainability Team and champions the practice of sustainable manufacturing at MAS, driving sustainability in key areas of renewable energy, chemicals, waste, and biodiversity. Our second panelist is Mohammed Jabbar, is Managing Director, DBL Group. He has almost 30 years of experience in the ready-made garment industry and is passionate about corporate sustainability. DBL is a signatory to the UN Global Compact, and Mr. Jabbar has aligned the sustainability activities of DBL with the UN SDGs, the Sustainable Development Goals. Finally, we have David Harity, Managing Director, Growth Propositions at HSBC. He's responsible for supporting commercial banking clients' complex financing needs, including sustainable finance. He also supports companies operating in the new economy sector. So welcome everyone. So perhaps if I may, I'll start off with Sharika and Mr. Jabbar. How would you describe the state of sustainability in your country's textile and garment sector? Maybe Sharika first?
Sure. Thanks, Alan. So with Sri Lanka, let me just say that in the past few years, we have always invested, just like Jonathan was saying, we've been aware of the significant impact the apparel and textile sector has had. So we've been a member of the Sustainable Apparel Coalition since 2011, and we've been making some big movement in the sustainability space. So when we were hit by this whole COVID area, we realized that, what happened was all of the sustainability investment we did held us a little bit strong. Initially, we were all a little bit taken aback and surprised by the sudden lack of production and us being, orders getting cancelled. But as soon as we got back into work, obviously health and wellness was prioritized from a sustainability perspective. And when we started engaging with our customers, what we found is that their aggression levels for sustainability had not come down. And what was interesting that even from our board perspective and from MA's perspective, if there was one thing we still wanted to push strong was in terms of the sustainable agenda. There were so many things that Jonathan said that resonated with me in terms of how important this is, in terms of how fragile and how something unexpected like this can really move us. And I think the fear of that should only strengthen our sustainability initiatives. So I think back to you, Alan, maybe.
Thank you, Sharika. Mr. Jabbar, how about a DBL group? How would you describe the state of sustainability in Bangladesh's T&G sector? Mr. Jabbar?
Okay, all right. Okay, this is since last 5 years, you can hear me, huh? Okay. Since last 5 years, we see enormous development on sustainability in textile and garment sector. The industry here has embraced sustainability, causing the total change of mindset. This is why the industry is growing. And we, from the very beginning, like, 2012, 13, 14, that I see that the development organization and brand has contributed a lot to change and bring in sustainability in industry. And later on, I see the Accord and Alliance has done a very good job here for the building safety, building and infrastructure safety, and also and the safety issues. So here we see that occupational and health and safety is also working a lot here. So I must thank the IFC, GIZ doing the good job. And in Bangladesh now you see that we already have 121 LEED certified garments and textile factories, and some of them got platinum rating. So what I see the country is going towards, the industry is going towards as a total sustainability. I see that this is why the industry here in Bangladesh is really, garments and textile industry is really sustainable for future days. Yes.
Thank you, Mr. Jabbar. If I can stay with you, I guess a follow-up question is, what do you see are the biggest opportunities as well as the challenges to implementing sustainability in your industry, in your country?
So this is what I see the challenges. This is investment, which is access to finance, and the policy and policy implementation. So these are the area that I see the most challenge, and I think that, this is in I was attending in COP25, that like also HSBC representation was there. So I see that in coming days, we're going to look forward, we're going to see some really good initiative from HSBC to mitigate this area. So another thing is the investing in sustainability is this like the brand. This is nowadays you see that the consumer mindset is changing. So this is why brand is also looking at the sustainable factory. The people are investing in sustainability. So I see that this is how we can be a preferred customer of a brand, and what is usually ensure our water flows. And mostly that investing in sustainability, that also increase our competitiveness because of the resource efficiency. Thank you.
Thank you, Mr. Jabbar. Sharika, are you seeing the same types of challenges and opportunities in Sri Lanka in terms of sustainability?
Sure, Alan. Yes, we do see challenges, like Mr. Jabbar said, in terms of access to understanding how to access the finance, etc. But for us, also a big challenge has been the speed of the innovation required, the change of how we have to now change our processes, the way we work. Something that came after COVID that we found very interesting and that pushed us to do was how we communicated with our customers. For example, it was always physical prototyping that we sent out, and we had to suddenly shift into these tools that was virtual prototyping, and that made the speed of our interaction with our customers extremely fast. So getting used to using these tools were also significant, but from a sustainability aspect where you were sending 5 packets of prototypes out to 3 different parts of the world regularly, every day, there's a significant saving in the way we work. In addition to this, I suppose the challenges are with the way we have set our new normal. If you take our factory lines, for example, with all the social distancing, etc., we've had to have significant production and efficiency losses. So I think for us that we need to rethink and use innovation to get things back on track. So the information that we get from our customers is, as far as they're concerned, they're very committed to their sustainability strategies, so we still want to move forward aggressively on that. And we get similar feedback from consumer surveys, etc., that the interest in buying sustainable product is very much a part of their decision making. So back to you, Alan.
Thank you, Sharika. So both you and Mr. Jabbar mentioned access to finance as a challenge. So I'll use this as kind of like a pivot to go to David. David, sustainable finance, it's part of your portfolio at Growth Propositions. Can you share with us what is on clients' minds when it comes to sustainable finance? What are their main considerations when deciding to go green or not to go green? David, over to you.
Sure, thanks Alan, and appreciate the time to share some thoughts. I think, when we're speaking to a lot of our clients, most of the clients I speak to are based in Hong Kong and Greater China, but they highlight some of the key challenges that both Sharika and Mr. Jabbar have highlighted around access to finance. A couple of the other challenges they face with regards to sustainability is really around time, flexibility, and actually knowledge. And so these are the kind of 3 or 4 things that, how do we take the broad banner of sustainability and distill it down into what does it mean from a financing perspective. And we've actually done some sort of interesting work in Hong Kong with some clients of all different sizes. So we work with clients from in the SME market, key parts of the textiles and garment supply chain, through to industry leaders who have global operations. And we've got a few different ways of helping with them that definitely shape their investment decisions. So simple things for our smaller customers when they're making investment decisions around pieces of machinery, investing in equipment or plants. This is definitely, the sustainability elements is definitely featuring on their agenda now. So looking at how this equipment will fit with their sustainability agenda, maybe reducing carbon footprint, maybe reducing water usage. And we have specific financial products that we can help them to support them. In Hong Kong, we actually have a scheme where we give a rebate back to the client based upon their carbon reduction. So it's not often you hear a bank saying that, giving money back to clients, but that's certainly putting our money where our mouth is. And then a couple of the products that Jonathan mentioned earlier, really, we're seeing clients on a broader corporate basis accessing green loans to help investing companies making sort of broader wholesale changes to the way that the sustainability way they approach their business. And that's been quite effective, and we're seeing larger clients really do that, accessing green loans and diverting the funds to make sure they invest in the right systems and processes on a broader scale, and we've helped a few clients through the course of this year already.
Thanks, David. So let me go back to Sharika and Mr. Jabbar. So how has COVID-19 changed the attitude towards sustainability? I mean, this seems to be a trend that has been happening before COVID, but has COVID accelerated, like exponentially the adaptation rate or adoption rate of sustainability? Sharika, can I go to you first?
Sure, Alan. I think it's made us rethink. It's given us an opportunity to, as everybody said, hit that reset button and rethink about how we do everything. So it's really given us an opportunity to talk about how we will change the way in which we interact, for example, with our customers, how that's saving us a lot on Scope 3. But in terms of post-COVID, we are definitely seeing, I would say, almost a more aggressive plan, because it's further endorsed by our customers that we don't want to find ourselves in sort of a climate impact, some sort of challenge to do with where we're taken by surprise. So we are seeing, for example, MAS right now wanting to declare our science-based SBTi targets and make public commitments to emissions reductions. So these are all things that we are now still coming out very strong even post-COVID. And I think that we will continue to see our brands and consumers wanting to have more and more ideas on transparency. I think we talked about everybody wanting to know where their product was made. So we've started working on a lot of collaboration with the supply chain to make sure we share information with each other. So all of this is moving towards getting us in the right place. Back to you.
Thank you, Sharika. Mr. Jabbar, at DBL, what are you seeing? Is this, speeding up the transition towards sustainability?
This is what I see. The sustainability agenda is still high, and here the technology embracement has accelerated the sustainability journey. So this is now that people, as I definitely add to the Sharika, I agree with her, which is like this is a rethinking, and that I think that this is the pandemic situation. COVID-19 had accelerated the importance and thinking the faster. So this is like, this is people are looking at the supply chain and other area, how it can have less impact. As I see that as the DBL is a signatory of UNFCCC and also UNGC Global Compact. So what the thing is here, that what I see here in industry and also brand, everybody is in same page, how we can have less impact on the nature and environment. So this agenda this is why I'm calling it, the steel is high and it is even growing. So this is what I can see. So the sustainable journey will definitely will go more faster in coming days. And now the world is in the same pace, everybody. So textile industry will grow on the way to sustainability. Thank you.
Thank you. And David, from a FI perspective, are you having more conversations with clients around sustainable finance?
Yeah, Alan, the conversations have definitely increased, and I think that was probably my more personal worry, is that in the COVID situation, people revert to sort of short-term views, and in a situation like we are, where it's very much survival for a lot of clients, that they revert to short-term views, and many of the sustainability issues are real long-term problems that we have to solve collectively. But definitely the discussions with clients have picked up a lot of pace in the last year. Our support over the lending products that we've touched upon on green loans and sustainability-linked loans continues to rise year on year, and we're very public about our institutional commitment to green financing, including the bond market as well. So, clients definitely want to hear more, and I think the transition from the broad sustainability banner into, okay, practically how can I apply this in my company, and how can I measure myself, and what's my benefits from a financing perspective is something we spend a lot of time working through with clients and understanding how we can support them.
Thank you, David. Next question I would like to pose to Sharika and Mr. Jabbar. So Jonathan earlier mentioned that the apparel industry, employs about 10% of global workforce, accounts for about 2 to 3% of global GDP. So clearly a huge player in economic development. At the same time, it can benefit more from sustainability. So how are you collaborating with your buyers and your suppliers to promote sustainable practices and policies, and any best practices that you can share? Maybe I can start with Mr. Jabbar.
Well, this is what I see, that we all are working on the sustainability, and the industry has a lot of good practices. Like DBL, we have good practice since 2008 that we have opened up fair price shop. So this is a really good example for the industry. So this is how our brand is also, just is sharing with the other industry, other factories. So, and then this, what I can say, the fair price shop lead us to get the recognition from the business call to action, which is under UNDP. Same time that we work pilot program from started in 2012 with IFC, cleaner production. That led to Pact 1 and now Pact 2, which is a global program now. So what is thing is, so this is this kind of the good story has to tell and share with in all, around the world, that as like traceability we work and other thing. Thank you.
Thank you. And Sharika?
Sure, thanks, Alan. So for us, in terms of some of the workforce, you're right, MAS alone, we have 100,000 employees working for our organization. So the challenges have been huge. And sharing some of the best practices. So as I mentioned before, we are a member of the Sustainable Apparel Coalition, and the whole purpose of cooperating with our other brands, manufacturers, and supply chain was that we would start using the same tools so that we could be able to then share and the results that we would get, so we would not have audit fatigue from doing several different audits. So for us, one of the key, sorry, getting some feedback. So one of the key tools that we use are the HIG index, the MSI tool, which is a materials tool, all from the SAC, and we've had more than 2,500 brands all agreeing that this is a standard that they will use globally. So back to you, Alan.
Thank you. Another question. So earlier I mentioned that sustainable fashion has the potential to kind of revolutionize the way the industry operates. So in your view, both Sharika and Mr. Jabbar, do you see sustainable fashion as a fad, or is it here to stay? And I guess if we can future gaze a little bit, how would the future of fashion and retail look? Maybe Sharika, you start?
Sure. So for me, I don't even know if we can use sustainability and fad in the same line. So for me, I think that if you wanted to say what would be a fad is if you were a brand and you had a capsule collection and said 80 or 90% of the stuff in the store is made the regular way, and I have committed to a tiny little capsule, and this is how I'm going to call myself sustainable. I think that we need to move beyond that. I think the organization and brands that have integrated sustainability and said, when you walk into my store, everything about it is moving towards a more sustainable future, is what is here to stay. And it is not just, it's the whole experience with that store. So I think we're going to see consumers also moving to far more sophisticated understanding of that. And we're not going to see people who are going to be convinced that a little line of stuff made out of some sort of, organic material hanging on one side is going to be, that would be the fad. But sustainability, definitely building, de-risking our operations, how we make things, getting ready. I really think there won't be any other fashion other than sustainable fashion going forward. That would be the new normal to me.
Mr. Jabbar, what do you think? Here to stay? How will fashion look in the future?
This is sustainable fashion is here, is going to stay, and definitely is going to stay for that's the future. So this is what we see, that the embracement of technology like AI and stuff. Nowadays, the see that in the coming days we're gonna see a lot of online e-commerce business, and that is we are definitely looking at in retail and stuff. So we see that the sustainable fashion will have also a lot of influence of the technology. That's what I see. Thank you.
And I guess one more question related to sustainable fashion. How far are we away from a net zero in terms of sustainability in the fashion industry? And how do we get there? Do you want to hazard a guess? Mr. Jabbar first, perhaps?
Okay, so this is, I think that, this is in COP24 and 25. That is when the fashion industry signed the UNFCCC in COP24. And then followed by 25, then I see that in same platform, I see the financial institution, brand, and also civil society. Everybody was in there and echoing the same. What is the question? Sorry.
Net zero in terms of sustainability.
So this is for that I see that there is followed by that, even in the last year COP25, I see that carbon disposal program (CDP) is taking all brands very seriously. I think this is nowadays is become a criteria for evaluation. I mean the factory assessment. So as a part of the DBL now, we make public disclosure first time on August 25. This is this is the thing is I think the way it is heading towards, I think is 2050. I think that if we all work together, it won't be very hard, because a lot of innovation has been going forward in terms of dyes, chemicals, process, and machineries, conservation, and total. In total, you see the water and energy. So everybody, this sustainability thing is coming in the DNA, excuse me, DNA of this industry. So it is this is usually last 2-3 years, it is heavily people are concerned. People are understanding why these things happening, flood, then fire in Australia and US, and the storm, cyclone, the way the nature is hitting the mankind. So now people has definitely fashion industry, because we are a lot big contributor here. So now everybody understands the importance. So I think that we will be able to achieve this 2050 before, lot before. even 2030 is like Sustainable Development SDG goal. I think this goal will be achievable even before that 2050.
Sharika, any? Oh, sorry.
If we all work together, yeah.
Okay. Well, speaking of working together, Sharika, any additional thoughts from you on net zero from a sustainability perspective?
Thanks, Alan. Yeah, definitely picking up on what Mr. Jabba was also saying is that the success of this is definitely going to be the collaboration of the government, the regulators, and all of us playing our part, and of course the consumers also responding accordingly. So right now, what I see today is that everybody's signing up on the science-based targets. That's what manufacturers and brands can do right now. And what we are hearing is that big brands that we're working are looking at as much as 70% reductions on their emissions by 2025. So taking us to net zero based on regulation, based on investment, and most importantly on innovation will all be criteria. But I definitely hope that we're moving in that direction. Thanks, Alan.
Thank you. David, I'm gonna put you on the spot. I'm gonna give you the last question. So sustainable finance has a huge role to play in this whole transition towards sustainability, not just for T&G, but for the world in general. HSBC ourselves, we have a 100 billion sustainable finance goal. We're more than halfway through. But the off-cited barrier to sustainable finance is the cost, the financial cost itself. Perhaps can you like demystify it for us? Can we ever get to a point where the difference between sustainable finance and traditional finance is negligible?
Yeah, sure, Alan. Thanks for the final question, and thankfully it's easier than the previous question you asked the other panelists. Look, I think we are getting to the point where there will be a pricing benefit for sustainable financing. So I think to draw on Jonathan's presentation at the start of the session, sustainability-linked loans, whilst they're only formed in the last couple of years, the volume has grown significantly. And I think it's fair to say Asia, we're a little bit behind probably Europe and the UK, North America, in terms of loan volume issuance. But that certainly provides a direct pricing benefit for customers. So quite simply speaking, setting sustainability performance targets, so setting a certain amount of metrics that you will measure yourself out as an organisation, whether they are environmental or social or governance related, and then measuring those over time and how you perform against those targets over time. If you overachieve, you will get a reduction in your pricing. If you underachieve, it will be an increase in pricing. So I think that is one of the big areas we're spending a lot of time with our customers on, not just in this sector, but in other sectors, because it offers direct benefits. So it's a much more of a practical application of a sustainability strategy, as you can actually see more benefits coming through the P&L, in addition to some of the changes that we've made in the processes that will be done by the experts to drive efficiencies. That financing definitely has a role to play in driving this agenda across various industries.
A final curveball question. Pre-COVID versus post-COVID. Have you found the conversion of client conversations to sustainable finance? Has it been easier? Has it been more difficult? What's the change?
I think that's a good question. I think all I can say is the momentum is still there. So I think conversations were happening last year, and people were obviously devising plans, and then I think this year has really driven home some of the need to have these plans in place. I think in the last 9 months in Hong Kong, we've done our first socially linked loan. We've done a number of other sort of environmentally linked loans to help with clients. So I definitely don't think this has gone away. And I think to your earlier question around it being, is this a fad or is it linked to being a fad? Certainly not. From what we're seeing with our clients, it's a genuine board level discussion topic where customers are really thinking closely about how they can position themselves, and their sustainability strategy goes hand in hand with their commercial strategy.
Thank you, David. This draws our session to a close, but before you go, we would really appreciate your feedback on this session. You should see a feedback window in front of you. There are two questions. First one is, how relevant was the topic of today's webinar to your business? And the second one is, do you find the content useful in terms of how sustainability can bring value to your business? I want to thank Sharika Sinanayaka, Mohammed Jabbar, David Harity, Jonathan Drew, and most importantly, thank you to the audience for dialing in. We hope you found the webinar insightful. Stay safe, stay connected, have a great rest of the week, and look forward to seeing you soon. Thank you.
Thank you very much.
Thank you.